Alrighty, guys. Today is October 17th. October 17th, 2017. Tonight's webinar is entitled Think Like a Trader. So you're probably asking yourself, well, what exactly do I mean by when I say think like a trader? Because you're probably saying, well, hey, we're all traders. That's what we're here for. That's what we do for a living. That's what we do. We buy and sell things. But that's a big difference from actually thinking like a trader. When people say that they trade, well, okay, so you buy something, you try to sell it at a higher price, or you short something, try to cover it at a lower price. Now that's just the act of actually buying and selling an equity, but it's not actually the act of thinking like a trader. So now this is a little deeper than normally just looking at charts or whatever. It's really a big mindset kind of a webinar. And so what it is I want to kind of take you out of your physical state, that state that you're just looking at a chart or a candlestick or a pattern or whatever. I want to take you away from that, and that's why I'm not bringing up charts right now into this webinar, because it really has nothing to do with a chart. It has nothing to do with any specific chart or group of charts or sectors or anything of that sort. So it has nothing to do with the chart. So what I want to do is I want to take you away from looking at charts, and that's why I don't have any of them on the screen. I want to take you away from the act of physically looking at a chart and get into like a mindset type of a webinar. I want you to be able to understand where I'm coming from when I say that to be able to think like a trader, to be able to assess things, to be able to see things in a different way, to put a different spin on it, to feel the charts as they're moving, to feel the emotions of the candlesticks as they move, to understand the relationship of something that's been up and why it's going down, or something that's been down and why it's going up. I really want to kind of get into that that deep part of you as a trader, not just the physical part of you as a trader, not just that clicking button person, but more so as what happens in your mind. What are you thinking about when you're taking a trade? What are you thinking about when you're seeing a trade happening? So let's just jump into it. So I got a few slides that I put together. It's nothing elaborate, but let's get into slide number one, and then so as we get into stuff, we'll start explaining. I'll start explaining more about stuff and how it relates to the topic, which is basically think like a trader. So the alert. Now that's just where you're gonna get where you get the idea of a chart starting to move or a trade that you want to take. Now alerts can come from, it come in many different forms, right? Obviously, you can get it from a chat room that you're in. You can get it from a news feed that you have. You can get it from a scanner that you're running. You can get it from a Twitter feed. You can pretty much get an alert from anything. An alert itself, though, by itself does nothing. An alert itself does absolutely nothing. Doesn't help you to make money. Doesn't help you to lose money. Doesn't really do anything for you. It's just an alert. It's like somebody walking on the street and just tapping you on the shoulder and saying, hey, there's a rock in front of you, don't walk into it. But if you can still walk into it if you felt like it, right? You could do nothing about it. The alert itself is nothing. The alert itself just brings that chart to your attention. Now, what do you do with that is what's making you start to think like a trader. What you do with that alert really kind of changes you from being a person that's just sitting behind a desk watching a platform to a person that's reacting to that initial alert. So the alert itself, well, that can come from anybody. So the alert is not the focus on thinking like a trader, because anybody can get an alert. I can open up my Twitter feed and get an alert. A lot of people on Twitter, if you follow the right people, they have alerts that are wicked quick. Or you can get a subscription for a news feed and you can get an alert. You could be in a chat room and you could hear a dude saying, hey, well, BNTC is moving. It's an alert. So you can get an alert from anything, right? And you can have a simple scanner and you can get an alert. So the alert itself is not the trade. the alert itself doesn't really help you to think like a trader. So what really kind of gets you into thinking like a trader? What really kind of transformed just an alert to helping you to think like a trader? So let's jump into the second slide, and we'll go talk about the emotions a little bit. So once you see the alert, there's a lot of things that happen to you. Initially, the first things that you do before you click a button, before you actually pull up the window to buy or sell that particular stock, the emotions happen, the feelings of, hey, if it's a good alert, if it's a news alert, let's say it's a catalyst, let's just say it's a phase 3 FDA approval or something. And so you the emotions here, that's what you're dealing with, right? You're dealing with, okay, the first one, the most popular one, is greed or fear. I mean, I think those are kind of, honestly, I think those kind of rank right next to each other, greed and fear. The first emotion really kind of takes control, and you say, well, okay, well, where can it go to? And so before you do anything, about the actual execution of the trade, you're already thinking, where can it go to? Why are you thinking, where can it go to? Because you're thinking how much money you can make, instead of thinking about what the chart's been doing, how it's been reacting, what's the real catalyst behind the move. You get the alert, and the first thing that comes to your mind is, how much money can I make off the trade? And so some people, their emotions run wild. As soon as you get an alert on something, that's the first thing that they do. Instead of doing anything else, they say, how much shares can I buy to make X amount of dollars? If I bought 5,000 shares and it went a point, I could make a quick $5,000. And so the emotions are the first thing that happens to you when you do get an alert. And that emotion, it comprises of greed, which is, how much shares can I buy? Not how much money can I risk? Not how much of my capital do I need to risk in order to facilitate the sort of stop or the sort of range that I would need to have to manage this trade properly. So a lot of people are not thinking about the stops. They're not thinking about, where's that last pivot point, just in case that the chart was to fail, where I would need to exit this position. They're not thinking about that sort of stuff. They're thinking about, how much money can I make? And so that's your greed. Now the fear is that part where they go, oh my god, I've lost so much money before, I've done stuff like this before. And the first thing that comes to their mind when that alert hits, they start thinking about the, I'm gonna lose money again. I'm gonna be lost again. I'm gonna be in the red again. So I can't take this trade. And that's where bewilderment comes in, because now you're just confused. You just don't know what to do with it. And trust me, as a day trader, one of the most important things as being a day trader is being able to execute things in your head rapidly. Being able to really kind of assess situations in a split second so that you can make that decision. And there are tons of different things that comes together for you to be making a trade happen. Now, your brain is an amazing thing, and you won't even know how many things you're thinking about at the same time. At least on my behalf, on my part, when I see an alert goes off, and it doesn't matter if it's coming from my scanners or whatever. If I see an alert goes off, there's 100 things that I'm looking at the same time. I mean, I'm looking at the immediate chart. I'm looking at the L2. I'm looking at the timestamps that are passing through. I'm looking at where it came from, where are the gaps, how does it look on the daily, where are my moving averages, where can it go, and where do I need to stop out. I'm looking at a whole bunch of things at the same time, and this stuff really just kind of happens in a second, because you sometimes, as a day trader, and you guys know this for a fact, that sometimes as a day trader you don't have the time to sit back and relax and say, hey, well, maybe I'll do this or maybe I'll do that. Sometimes you just have to react to things. And so your emotions, when you first get that alert, your emotions really kind of depict which way you want to go, what kind of trader you really are. Apprehension, well, you just don't know what to do with it, right? You're hesitating, you're cautious. So it ties into a lot of these other things, right? So I think that greed is just at for right now. I kind of put it at the top, and I really think maybe it is a little bit better than fear, but or stronger than fear. But greed would be that first emotion, that how much money can I make off of this alert that was triggered. And then everything else trickles underneath, because you got fear, but it's why are you fearful? Why are you confused? Why are you cautious? Well, it has to be because of something that have happened to you before in the past. It has to be because you've lost money. If you never lost money in day trading or trading in general, you won't have fear. You see, initially, traders don't have fear. Initially, when you start trading as a fresh trader, you don't really have fear. And sometimes it's one of the best part of being a new trader. And I feel like when I talk to a lot of traders and they come to me and they want to work with me, um the people that are newer, I love working with those people because they don't have that loss. They don't have that emotion. They don't have that dislike or like or hatred or any of those type of feelings towards stocks or particular sectors of stocks. And so I feel like sometimes with the newer traders, I really could kind of just manipulate just a little bit easier the mindset, because the mindset is not already kind of, it's not embedded, it's not burnt into. And you see, when you get burnt with stuff, there's a lot of other things that come along with that. There's a lot of other things that trickle down, and things that you don't even really have names for, things that you don't really think about. You see a chart moving, and there's so many things that go through you. Why, when you see a chart moving, or you get an alert on something, you instantly go cold, or you instantly start worrying about, hey, how much money can I lose? Or you instantly start thinking about things that you shouldn't be. You should just be trying to focus on the chart itself or the trade itself, right? And how many times that you've seen an alert, and maybe you passed on it only to see it work and the way that you wanted to, and then you find yourself comforting yourself saying, well, I knew that was going to work. But if you knew it was going to work, then why didn't you take it? And so you find comfort in saying to yourself, well, I knew this was going to happen, but you never took it in the first place, right? So that reasoning for not taking the trade, that's the part of you that I kind of want to tap into. That's the piece of you that I want to kind of understand, and maybe try to change a little bit of how you should be learning to adapt to the trades, adapt to the environment that you're in, and be able to think like a trader a little bit more, because that's the key element, I think. That when you do get an alert, when you do get a scan, when you do get a high of day breakout or an opening range breakout, or whatever the catalyst is for your reason to justify that trade, there is that part of you that isn't really connecting to the rest of your trades. There's a part of you that's not being dominant. And so if you're fearful, if you're scared, if you're cautious, if you're confused, the only dominant emotion that you have that's running through you is the part of you that's not willing to be the trader that you want to be. That's the part of you that's holding you back from taking that trade, from taking that risk. Um, Let me just jump into the next slide, because I think there's probably something on this slide. Yep, okay. That's gonna kind of make a little bit more sense from that emotions part. So first we had the alert, which can come from anywhere. And then we had what did we have after the alert? The emotions that ran through it, and then the reaction. So now this is your reaction. So first you got the alert. Now you're scared, worried, happy, excited, cautious, whatever that is, right? That happened, and now you're and this is all happening, by the way, in a split second in your head. The reaction, what do you do with it? So you got the alert, you've gone over all of the emotions in your head. Even if it takes a hundredth of a second to go through, there's some sort of an emotion that passes through you at that point. And then the reaction, what do you do with it? Are you buying it? Are you selling it? Are you just sitting back and watching it? Because a lot of us do that. A lot of us see an alert and without doing anything because you're scared. I don't like trading pigs. I don't like trading big charts. I don't like trading fast moving stocks like that. The spreads are too wide. So a lot of us don't participate in stuff. And then a lot of us, which is sad, it's a sad thing, the last one. It's a sad thing where you have to wait for somebody to tell you what to do. And this happens a lot when people rely on other people to make judgments for them based on what they can't see. Why do you have to wait on somebody else to make a judgment for you? Why would you have to wait on somebody else to tell you to buy it or sell it? Shouldn't you be able to react to that alert with the right emotions and then come in with the reaction and formulate yourself a trade? Shouldn't you be able to do that on your own? So what's the problem? Where's that bridge? Where's that gap that needs to be bridged there? A lot of people have to wait for instructions, especially a lot of traders that are, you would see them on Twitter. Somebody will say, okay, well, blah 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 is moving or whatever, has a PR, and then somebody will come up and they'll say, so what are you gonna do with it? Well, that's a person that's not ready. That's a person that isn't ready to make that step. That's a person that isn't understanding what it is that they're doing, first of all, because this isn't a game. And that's a person that's going to end up just following somebody else, or a person that's in a chat room. And instead of saying, well, hey, I'm long on this chart because of XYZ, they're coming to you saying, well, should I long it? Should I do this? So that's a person that really doesn't have the proper training to do the job at hand. Now, if you were to be a doctor, you need to go through proper training. If you're going to be standing in a court of law, you're going to need to go through proper training. If you want to be a day trader or a trader in general, you need to go through a certain proper training. And without that, you don't have the right tools to react properly to that alert that you first got. Now remember, that alert can come from anywhere. That alert can come from Twitter. That alert can come from a chat room. It can come from getting a subscription from a scanner. It can come from anywhere. An alert by itself does nothing. An alert by itself does absolutely nothing. You the first to get the alert? Well, congratulations. What have you done with that? How did you react? How did your emotions control your trade to make you be that person that you want to be? To make you become that trader that you actually want to be. So your reaction here is really where you define what you do with the first alert, what you do with what you've seen before. And sadly, a lot of people still have to wait for instructions. I feel like that's such a letdown. It's such a letdown. I think that if you're going to be trading, okay, if you're going to be trading, if this is something that you say that you really want to do, I think that you need to invest in learning about it, right? You guys have all come from a profession before, and or still in it and doing this part-time. Now, in that profession that you're in, did you go to school for it? Was there a learning process? Was there practice? Or you're not going to be great at doing what you do for your current living, or before. You're not great at it just by chance, right? You're good at it because you've done it time and time and time again. And were you great at it when you first started? The most likely you weren't, right? If you're a public speaker, most likely a first time when you stood in on the stage, you probably froze. And so it took time and practice and getting used to doing the same thing. Now this is the same thing with trading. So why is it that some traders can jump into trading thinking that, hey, I'll dump 25,000, $100,000 into a trading account. I'll follow somebody on Twitter that's an established trader, and I'll be able to do this. And so why is it that that person keeps on losing money if they're taking the exact same trades, but they're having different results? Because they're not thinking like a trader, because they're not really establishing ground rules in order to control the trades that are in front of them. They're getting the same alerts. I get the same alert that you get. I see the same chart that you see. We may be on different parts of the world, but if SRAX pops, we'll see the same chart. If I have the same scanner that you have, I'll be able to see the same scan. And so, what's the difference between somebody getting into the chart to the difference from the difference that the person that stand by and either they watch it or they wait for somebody else to tell them what to do? That's your reaction. That's the part of you right there that I want to tap into. The why. The why not. The what are you doing and what can I do to help you react better, to make stronger decisions at that point when you need to make that decision the most. See, in regular jobs, you'll come across a problem or a situation. You can analyze it, you can sit back and you can assess the situation. You can take your time and you can do certain things because that's the way that some things work. If you have to climb up on top of your house, you can stand back and you can think about how do you want to get up to your house. How can you get to the roof of your house? Well, you can say, okay, well, I got a ladder or I don't. Maybe I have to borrow a ladder from my neighbor. Whatever the situation is, you can still think about the situation and how you want to go about doing it. So you can break it down in steps, and you don't have to actually physically say number it, right? But you do break down things in steps in your mind. If you're saying, well, I want to go on my roof, I don't have a ladder. Where do I get a ladder? From my neighbor. These are steps that your brain is taking. These are steps that your brain is thinking about. You may not think that they are. You may not number them as steps, but these are steps that your brain's taking to make a decision. So you've come to a decision. So from that point where you say, I want to get on my roof, to the point where you say, okay, I have to borrow a ladder from my neighbor, there's a whole thought process in between that. There's a list of things that your mind has thought about during that entire thing. It may have taken a half a second to figure out, but that's how your brain works. Now, it takes the same time for you to figure out if you want to be in a trade or not. It takes the same time for you to analyze a trade, seeing it, getting that alert, going through your emotional roller coaster, get into a reaction part, and then you figure out what you want to do. And then once you figure out what you want to do, now you got yourself a trade. So this is the process. Now, say you did buy the trade. So you did buy that alert. So you made that decision. You overcame all of your emotional problems, buying or selling or being afraid or being worried or whatever, or you were just excited and you know what to do with it. So you bought the trade. You heard FDA phase three. You saw that the chart wasn't bought up, and so there's just a lot of things that are clicking, and you bought the chart. Now this is where your process comes in. Now this is still thinking like a trader. You're not out of the trade yet. You're not done with it yet. All through this process, you're still thinking like a trader, because without thinking like a trader, you're just buying and selling or clicking a button here and there. So you're still always thinking like a trader as this is going on. So the process, this is where you manage that entry. Now remember that entry into that position is just a buy or a sell if you're shorting it. It's just a buy or a sell. It's nothing else. There's nothing scientific about it. It's just a number, a position, an entry, and you have to start thinking about these things as in lessened form, or a little bit more calmly as you take trades. You have to say, okay, well, I want this chart at $100, and you get the chart at $100. So you get the chart at $100. You need to start thinking about it like, hey, well, I think this chart's going higher and I want to take it higher. I want to go higher with it. How do you think a lot of people make simple decisions sometimes, especially when it comes to chart? You see a chart that's curling, but why are they saying it's curling? Is it curling to the upside because they think it's going down? Is it curling to the upside because they think it wants more continuation, right? So it's a simple analogy of what the chart is doing. It's curling. Okay? If a chart's breaking out into new highs, what's going on with it? Are we selling it? No, obviously somebody's buying it in order for the chart to break out into the new highs. So these are all things that you need to start like simplifying and stop overthinking. See, a lot of people seeing a chart breaking out into the new high, and the first thing that they're thinking about is double top. But why is the chart breaking out into the new high? Well, maybe because it actually wants to break out. Maybe because the chart actually wants to make another leg up. And so instead of people trying to get into the habit of continuing a trade or letting the trade actually do what it wants to do, they want to prevent that move. They want to stop it from doing what it's doing because they see a double top. But isn't every single double top going to be broken eventually? Isn't every single double bottom going to be broken eventually? Isn't every single trend going to reverse eventually? So what if that time that you're trying to do what you're doing, it doesn't happen? And what do you do? When a chart breaks over a high position that you're in, or it breaks over a pivot point to the upside, it's breaking for a reason. It's not breaking because it just wants to screw your short position. It's breaking because the chart wants to go higher. It's not breaking because it wants you to lose money. It's not breaking because it wants you to add into that short position. It's breaking to tell you stop doing what you're doing because I want to go the other way and you're not on the right side. If a chart breaks over a high and you're short on it and it holds that support of the high breakout, go long on the chart and you can find yourself actually making money 9 out of 10 times on that same chart that you're trying to short, that same chart that you're trying to catch the bottom on if you're trying to be long. If you can just understand that every single time you're in a chart and it keeps doing the same thing to you, if it keeps doing the same thing to you over and over and over, if you keep longing something and every day you wake up and it's more red, if you keep shorting something every day, every minute that of the day, say you're short intraday, every minute of the day keeps popping over that area, keeps breaking over the resistance, and all you're doing is stressing yourself out and worrying and complaining and fighting and being angry about it. And this sort of mentality is not helping you to think like a trader. If you're thinking like a trader, you'll be able to say that, hey, this chart is not working the way that I want it to work, and I'm going to change my mentality about it. I'm going to change the way that I see the chart working. If something uh, if something is going to be going up and you're short on the chart, you have to say to yourself, I'm wrong. Admit that you're wrong. Put your hands up in the air, wave your little white flag around, surrender, cover your position, and take another trade or take that same trade in the direction that it wants to go. There's a trend that's developing if a chart breaks over the previous high spot. There's an obvious uptrend that's developing if a chart breaks over the previous high spot. See, a chart's breaking over for one reason and one reason over only, and that's to go higher. It's not breaking over so you can test a short position. It's not breaking over with volume because that 100,000 block that just came through thinks that it's gonna go. No, they know that it's gonna go. They're pushing it through. You have to understand when you're in a chart and it's breaking through the highs and you seeing that volume bar coming up, you gotta understand that you're on the wrong side of the trade if you're short, and you gotta get to thinking like a trader. Assess that situation quickly. Say, I need to be out. I'm wrong. This is wrong. I'm done with it. You take your loss, you walk out, then you flip that thing on the long side because you're saying if that guy with the 100K block wants to push it to the upside, then let's push it to the upside together. Instead of fighting it all the time, you can be able to ride the trend a bit and you will make money. Yep, Terry, 9 out of 10 times you'll make money. Now, it took me a while to discover this, right? It took me a while to really understand that I needed to start thinking like a trader a little bit more. I needed to start processing things. I needed to start seeing things the way that they are, not the way that I want them to be. I needed to start to be realistic. I needed to be open minded. I needed to be understanding that yes, that's a failed trade. Yes, that's something that I did that was wrong. Yes, that's the amount of money that I will end up losing because of the mistake that I've made. And you have to start being able to think like a trader. You have to start being able to see things in a different light. If you have found yourself losing money, if you're a trader that's finding yourself losing money on a regular basis, there is something there that's not working. If you keep doing the same thing that you're doing today, tomorrow you'll lose money. Next week you'll lose money. The week after, you'll end up losing money. You see, nothing's going to change. You see, the charts are not going to change. They're going to come around. They're going to go up. They're going to go down. They're going to go sideways. They're not going to change. They've been the same way forever. Okay, maybe the platforms have gotten different. Maybe the colors have changed. The thing, it has remained the same. If you're dealing with linear charts, or you're dealing with bars, or you're dealing with candlesticks, it doesn't really matter. The direction and the way that they move have been the same, and so that doesn't change. So what is it that's different? What is it that separates the traders that constantly lose money to the traders that can make a trade out of thin air? What's that difference? How can you figure that out? How can you tap into that, that's making that difference? That difference is in your mind. That difference is in your mindset. That difference is in you saying, hey, I want to do this a certain way, and if this doesn't work a certain way, if my theory is proven wrong, then I need to exit the trade. I need to be able to take a different outlook on it. If you need to step away from your desk and come back with fresh eyes just to see the chart in a different light, sometimes you walk away from a chart, or you trade in a chart, you trade in it aggressively, and you're thinking short that double top, short that double top, short that double top, and it keeps breaking, and you keep shorting, and then you keep adding into it, and then so you're not looking at the big picture, and then you step back, and then you look at the chart later on during the day, and you'll say, well, why was I short on this chart? What made me go in short on this chart? Where on the chart did I feel like this was justifiable? So you have to figure out what's the difference between the trader that takes a chart on the long side and makes money, to the trader that keeps trying to short the pops, the trader that keeps trying to buck the trend. What's the difference? It's a mindset thing. It's because um, people that are trying to play the charts are thinking differently from what you're playing. You see, the easiest thing, and I've said this many, many times to my traders, trading, candlesticks, all of these things, these are charts, these are graphic depictions of people's emotions. You see, when something's going higher, your emotions are also pushing it higher. Now, you may be saying, well, that's not emotion, that's money. But you see, in order for somebody to buy something, they must be thinking it goes a certain way, right? So in order for a candlestick to be going up, in order for a chart to be moving, it's an emotional depiction. It's something that you can kind of almost see people when they're excited, because you see how the candles jump, you see how the timestamps pass across, you see how the L2 moves aggressively. So you can feel their emotions through the chart by the way that they're aggressively buying or aggressively selling a certain chart. So the candlesticks themselves are just a basic graphic depiction of people's emotions. Now the thing is that when you start thinking like a trader, you start tapping into people's emotions. You start tapping into people's emotions. Now you're tapping into something that's completely different from just watching a chart or a moving average or whatever. You're tapping into that heightened state of somebody else's trade. You got to always put yourself into a position like, what would I do? If a chart's $100 and it's been up from $70 and it's moving up to $100, and today it spikes to 125, you put yourself in that situation. If you had it at 75, what would you do with it? And so a lot of people, they tend to take themselves out of a situation or out of a mindset to put themselves into a different mindset to try to capture a move, and they end up really messing with the entire thing. You see, if something's being bought up, take for example with Netflix today. So my idea, even from last night, I had messaged my group and I said I want to just short the hell out of Netflix. And it's because the chart was already bought up. There was already too much hype going on. Analysts were coming out days after days after days with upgrades and upgrades and upgrades. It was just being hyped up too much. It was being pumped up too much, and the chart was already moving up into that. So now when they get the quick little pop, that thing's sold off, and it's sold off all day long on Netflix. Just, it's not that the chart isn't good. It's not that they're not gonna go higher eventually. It's just that if you can tap into the emotions there, right, from the people that tried to buy into it for this big move, for the people that did not get the big move, for the people that got the move, or maybe they bought into it and this is about the move that they're going to get, so they decided that they needed to start selling. So that's why the chart trickled down. That's why I couldn't find a base today, because of that reason, because people who got into it, they didn't get what they wanted, or maybe they got a little bit what they wanted after hours, but the chart ended up closing right on the day anyways, on Netflix, I think. And so you see, if you can tap into something that's a little bit bigger. I know this is kind of, you may be a little bit confused, and it takes a long time to really kind of get that breakthrough, like where I'm at, honestly, in my trading career, in my trading mind. I really feel like I see things a little bit like through a matrix. Like I see a chart and I just see it long or short. I don't see certain things that I used to see. I don't see a lot of hindrances that I used to see. I see a chart. It doesn't matter which chart it is or what time of the day I bring it up. And there's about a whole bunch of stuff that I analyze on it, and it just happens quickly. Before I used to have to say, well, what is that? Now it's almost like second nature. It's like when you're driving, you've been driving for a while, you kind of understand, where you're at. When you're in the center of the road between the two white lines, you kind of don't have to hold the steering wheel really stiff to know that you're in the center of the road, right? And so after a while, it's become second nature, and it's kind of like that for me now, where everything has become second nature. Like I've taken my game up to a certain level where it's like I'm seeing things in a completely different way. I'm able to kind of analyze charts in a nanosecond, and which is great, because especially in these days with so much low floats that are moving, you kind of need to be able to analyze things a lot quicker. And so the processes that I'm going through, from the stages of the alert, to the emotions, to the reaction, to the process, to where it needs to be played out, which is where we're at on this slide, to the process of the trade, it just happens so quickly for me now. And eventually, the people that really want to end up doing this for a living, the people that really want to take it up to another level, you're allowed to get there. You're all allowed to get there. There's nothing that's stopping you from getting there. It's not your account size that's stopping you from getting there. Okay? If you don't have a lot of money in your account, it's not that that's stopping you from getting where you want to be. It'll take you a little bit longer because you don't have the certain amount of money to put onto certain amount of trades to make a certain amount of dollars or whatever. It's not the money, it's not the account, it's not the time. It's the way that you're gonna be processing your education. It's the way that you're gonna be taking things by steps, in the right steps that you need to. It's the way that you're not gonna be putting the carriage before the horse. You need to be doing certain things in certain ways to get certain results, and that's just the way that it's gonna be. You can't say that, hey, I want to learn how to short, but you can't even long a chart. You say, you can't say I want to learn how to do options and trade futures, but you can't even trade a regular chart intraday. You can't say that I want to be a position trader without being able to be a day trader. I think being a day trader has to come first, because you have to at least understand how the movement is during the day. You see, there are so many different things that people want to do, and there's so many things that people don't want to do. The things that people don't want to do: work hard, put in the time, dedicate themselves. Yeah, this job's a little obsessive. Okay, I do free webinars. I'm up almost 18 hours a day, pretty much 6 7 days a week. Sunday's my only slow day, and that's still about half day on a Sunday. Yeah, this is an obsessive job, but it has the rewards. It has a lot of rewards, and it only gets better. But it's an obsessive job. If you're not really ready to get obsessed doing this, if you're not willing to be up till 12 o'clock at night doing something, reading something, watching something, studying some charts, making some notes, writing a journal, if you're not ready to do that kind of stuff, well, you got to step back a little bit. And when you're ready to get there, when you're ready to get where this job needs you to be, because this is a demanding job. You thought your job is hard? I've never worked so hard in my life, and I love every single minute of it. I've never woken up so early for a job on a regular basis, and I love every single minute of it. I've never had a job where I hate Sundays because I want Monday to come. It's just, I mean, it's the type of job that it is, and it demands all your time, and you don't know where you get it from, but you do. You don't know how you spend so much time watching charts and reading this and watching that, but you end up doing it and you end up loving it. You love it more than the first day that you got into it. Because the first day that you got into it, honestly speaking, the first parts of your trading probably was filled with a lot of heightened hopes and dreams and big goals. And then they got squashed, and then you ended up being broke, and then you got through a stage where maybe you were trying to see the light, and then you started to slip again, and you started to lose more money. Maybe you're at a stage where you just can't get a freaking green day to save your life. Maybe every single trade that you put on goes against you, and you just can't figure that out. Well, the reason why things are happening and the reason why they continue to happen is because you're not willing to break that mold. You're not willing to change. You're not willing to think like a trader, to think like the person that you actually want to become. You see, because there's a lot of emotions that's holding you back from doing that. In order to be able to think like a trader and to act like a trader and to process things like a trader, in order to do that, you have to eliminate all of these bad things. You got to get rid of it. You got to get rid of the hatred, the fear. You got to get rid of the self pity, because a lot of people do that to themselves. I've seen it over and over and over. Oh, I'm not good at it, or I can't do this. I've lost a lot of money, blah blah. I've lost a lot of money too. Okay, but then you end up getting over it. End up getting over yourself because nobody else gonna feel sorry for you. You can't walk out into the street there and tell one of your friends that, hey, you just lost $100,000 trading, and you still want to do this for a living, because they will just slap you upside the head. They won't understand that. It's not something that's normal for anybody. So, in order to get over the things that you're dealing with, in order to pass those areas that you seem to feel like you can't get past, in order to break those barriers that you cannot break, well, you're going to need some help. You're going to need to be able to get into an environment and to get into a place that helps you to build your trading mindset. You're going to need to be able to break down the walls that you have built around your trading mind and kind of take yourself away from there. You see, if you're not willing to do that, if you're not willing to really say, well, I need help, this bleeding of my account has to stop, these things that I'm doing wrong needs to be changed. If you're not willing to make the first steps to say that these things that I'm doing isn't doing what I wanted to do, and I need to see it a different way. How can you see so many people taking the same trade that you're taking in a different direction? You end up being wrong, that person ends up being right, but there's no lesson being learned from it. It's just anger or resentment or hatred or distrust or whatever. All of these emotions come into it. Instead of learning a lesson from it, you take away all of this other emotions, all of this other baggage emotions that get carried on to the next trade that you take. So you build up baggage emotion after baggage emotion, and it's just a continuous flow of stuff that you keep doing that really doesn't help your future trading. If anything, you really gotta get through some of these things that you're dealing with in order to put yourself into a different level. So anyways, this slide I've been trying to read for the last 20 minutes. um the process. This is where you manage the entry. An entry is not a trade. As I said before, an alert is not a trade. An entry also is not a trade. It's just an entry. It's just you saying, well, here, there's the buy button. That's my amount of orders. That's the amount of shares that I want to have, and that's that. So that's the entry. That's not a trade. Okay, you're not a trader because you've hit that buy button. You're not a trader because you've just bought a stock. No, no, no. You're just a person that just bought a stock. That's it. You're not a trader. You're not an investor. You're just a person that bought a stock. A trade results in three different ways. Yeah, a lot of people say it's two different ways. Either it's a win or a lose. Well, it's either a win, right? A lose, or it can be a continuation. You see, you can always win more. And off the same trade that you had, you have an entry. You can either do, okay, say you do, for example, you bought a stock at $10, you sold it at 11. That's a win. You win 1 point, right? Or you bought a stock at 10 and you put a stop down to 10 to 950 and you lost 50 cents. That's your loss. So that's your two-way. But what about if the stock goes past $11? So that's your third outcome. That's your difference on you just having a winning trade to you having a continuation trade. See, from you getting to 10 to 11, it's a win. From you getting to from 10 to 12, you've become a trader. It's different because there's a whole bunch of other things that happens in between there. So try to think about this in as much as you could, from you for you to get from 10 to 11. You make a $1 move, doesn't really make you a trader. But for you to get from 10 to 12 or more, that's where you're now a trader. That's where you've gone through the emotional roller coasters of buying or selling, handling pullbacks, putting stops where you need them to be, analyzing the direction of the trade, how much can it go. Now you've become a trader. So that's a whole difference. So that's your process. And your outcome reflects your trade management, and that's exactly on the third outcome. What happens? It's a trade management thing, and then now your trade management reflects your P&L. So all of this comes down to actually, obviously, your P&L, right? So you have the alert, you have the emotions, you have the reaction, you have the process of the trade. From all of that, from where it first started, from where you got that beep beep and that alert set off, or hey, buy, 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 or whatever scanners you use, from that alert that came off, all of the emotions and the process that went through it, to right down to the end. How do you manage your trade in order to reflect a proper P&L? And that's what it comes down to, right? So you've got to really kind of decide, hey, where am I, and where do I find myself? And so that last slide right there, I'm not really gonna read it out loud because I feel like people could just read that and try to figure for yourself, where are you? Which one of these tabs represent that person that you are? And which one of the tabs do you want to be? Where do you want to find yourself? And if what you're doing right now isn't allowing you to do or to become the person that you want to become, then how can you go about changing that? How can you see things in a different way to allow yourself to think like a trader? To allow yourself to see things in a different light? To allow yourself to understand that if a chart's being bought up and it has great earnings and it pops, how does somebody end up shorting it and make more money? If a chart like SNCR moves to the upside, like today, how did I ended up shorting it pre-market and a lot of people probably went long? And so the difference is you have to start thinking like a trader. You have to start feeling the charts. You have to say to yourself, well, if that's a low volume gap down on a chart, then there's a good chance that the chart has a possibility to pop at the open. So maybe you want to long into the open. If there's a low volume gap up, there's very little people buying the chart as it's going up. So there's a high possibility that when these people decide to sell it, that it'll be a short into the open. Now that's a person thinking like a trader. When a trade pulls back on you but doesn't break the low of day, and you're still in the chart only to come back and see the chart making a winner at the end of the day, that's you thinking like a trader. That's you understanding that, hey, that was my pivot point. That was my reason for getting out of the trade. I didn't get out of the trade. I was red, but I didn't get out of the trade. I wasn't scared because that's the point that the chart needed to hold. And the chart ended up holding the point and ended up making me money. That's a person that's thinking like a trader. A person that analyzes things when they come across. You want to go ahead and read 1,000 pages of a form when it's filed during the day in order to take a trade. You don't need that. The charts are going to tell you what the form says. The charts are going to tell you how good the news is. See, like SGYP had some PR during the day today. I pulled up the chart and I said to my guys, I said, I don't care for the news. I really don't care. The chart's gonna tell us in 1 or 2 seconds here what the news is. The chart's gonna tell us how good the news is. The chart's gonna tell us the strength of that PR. The chart didn't go anywhere. It didn't even break the high of day. I said, what do? Nothing. You don't have a trade there. You see, so instead of having to waste time doing certain things, you can let the charts do them for you. And so in just standing there and watching the chart for a couple minutes pass by and it couldn't even break the high of day, that news wasn't that good anyway. So what's the sense? So you don't have to end up wasting a lot of time doing certain things sometimes. See, by the time you wasting time doing things, people are reacting. Money's being made somewhere else, or lost. And so sometimes you allow the charts themselves to really tell that story for you. You allow the charts to depict that move for you. See, if a news is good, the chart's gonna go up. If a news is bad, the chart's gonna go down. If a news is so-so, the chart's not even gonna break high and it's gonna be a sideways play. But these are things that you understand. These are things that you know. These are things that you may not have thought about it like this. You may not have really said, well, I guess that's true. If the news is good, the chart is going to go up. Or if the news isn't that good, the chart really isn't going to break up. I guess you've never really thought about it like this, but that's how simple it really is. The faster and the more times you can be able to think like a trader, the more times you be able to analyze trades simplistically. It's a simple thing. Let the charts allow the movement. Let the movements allow your decision making. Why, if you get a PR, that you need to be long on it right away? Right away. What's the reasons why you would need to be long on it? Well, you need a whole bunch of stuff to go along with it instead of you just jumping into the trade because there's a PR. I've seen phase three FDA approvals get shredded. I've seen great earnings report get shredded. I've seen crappy PRs ripped to the moon. I mean, so you've seen a lot of different things as a trader. So you understand that there's a lot of things in this field that doesn't really make sense. There's a lot of things in this field that you need to just kind of sometimes think outside the box because what you think is going to happen sometimes doesn't happen. But the charts are telling you what's happening. The charts have been telling you what's happening. The charts always tell you what's happening. If the chart is strong, it's going to break through the highs. If the chart is not strong, it'll break down to the lows. It's a simple thing. You have to be able to first think like a trader. You have to be able to see things differently from the other people. Because once you can find yourself in a mentality where you're kind of really in a zone and you're really just mellowed out, and here's that chart, it looks like it wants to pull. If it's looking like it wants to pull, not because it's hitting the top. See, that's the difference. A lot of people want to be short on things only when they hit the tops. Why not short it when it breaks the low? Well, you see, hitting the top could be a good double top. It might get a perfect double top play. But if the chart wants to be shorted, why not short the break on the low side? Why not short where the chart just broke its support? See, a lot of people don't think like that because they're thinking, oh, well, I missed that double top. There's no way I can short it now because it's breaking the low. And that's sometimes where people don't think like a trader. Why is the chart breaking the low? Why is it going lower? And if it was going to hold there, then you wouldn't have to be worried about taking this short. I think sometimes break over low on the short side is one of the safer trades to take. That's why I think sometimes break over high on a strong chart is one of the safest trades to take because it's already proven the strength to you. It takes strength for a chart to break through a high. It takes strength on a negative side for a chart to break through the low. So in order for you, that's why I think for people that want to keep it simple, why do you think people always try to look for new high scanners, new high breakouts, new high of day, new low of day? What do you think? These things are just talking for fun? No, it's because the charts needed to do something to get there. When a chart gets to a high and it's a perfect double top, people tend to short. In order for that position to change direction and to become a new high of day, it has to have volume to push it through. If there isn't enough volume, the chart's going to fail. If the chart has volume, then shouldn't you be long? Because there's a buyer that wants to push it higher. So, in essence, if you can start thinking like a trader, you'll be able to kind of analyze these things a lot differently instead of just seeing what you want to see and be able to see what the chart actually wants to do. So that wraps it up for the webinar, but we can definitely go through quite a bit more questions and anything else that you guys have of concern.